starting a fund, if you look at the statistics, the chance of you being in any way successful are infinitesimally low. And not only that, if you think about the opportunity cost that you incur in doing that, so you can do everything right, but if investors don't like you, you won't raise any money. You can do everything right trading, but if you don't have the infrastructure, they won't give you any money. So you can be the best guy in the world, and if you start at a time that your strategy is going to struggle, you won't have a business.
Hi, everyone. Welcome to another edition of My Life in 4 Trades. Joining me today is Todd Edgar, CIO of Atreaus Family Office. Enjoy the conversation. Hi, Todd. Welcome to My Life in 4 Trades.
Hi, Maggie. Thanks for having me.
I'm so happy to have you. I have to say, I'm so intrigued by the 4 trades you sent over. So I'm excited. But before we jump in, it's our tradition to have our guests tell us a little bit about themselves. So give us a little bit about your background. Where'd you grow up? And what were those early years like?
Well, it's a probably good segue into a couple of the trades, actually. So as you may be able to tell from my accent, which I'm grimly still trying to hang on to, I'm Australian, but I've been away from Australia for 26 years now, so my accent is not what it once was. I grew up in country Australia, so my accent was once much thicker than what it is now, to the point where I go back there now and my high school friends all tease me for sounding like Greg Norman. And which is horrible, by the way. That's the last thing anyone would want.
So when you were young, were you outgoing? Were you a numbers guy? What were you like? What kind of, what did you identify with?
Well, it's sort of interesting. I have 3 children, as I mentioned, and my daughter is me, which is
really
not good and bad, I guess. So and it's interesting seeing her behavior and seeing myself in that, in terms of in that. So I would describe her as surface shy, but underneath quite outgoing. And that's, if she knows you, she'll be, quite outgoing in the life of the party, whereas she doesn't know you, she'll be much more clammed up, and I'm probably pretty similar. And then I was sort of fortunate enough to be, pretty, in terms of interests and academic stuff, in terms of, I was decent at math and decent at more the artsy side of stuff too. So fortunate enough to be okay at all those things, which has been a pretty useful set of skills for what I've subsequently done, I think.
Yeah. Did I read someplace or hear that you did some philosophy as well?
Yeah. That was sort of what I grew up with not a ton of money, so I actually started. When I finished high school, I actually worked full-time straight out of high school at Price Waterhouse as an accountant, and went to college at night, which was horrible. But and I found I didn't really particularly like accounting, so I switched over to philosophy, and that's where I sort of finished my degree there. But I'd always had an interest in markets, an interest in finance, so I was fortunate enough to fall into, despite my degree, fall into what I'm still doing 30 years later.
It's at the end of this, I'm gonna have to go back and count. But what's so interesting is, so a lot of the people that come on the podcast, most of them have had, a fair amount of success. And that's probably putting it mildly. And a lot of them have gone through some variation of investment banking, or they're serial entrepreneurs, and I can't tell you. There's a great number of philosophers in this group, or people who took philosophy in college, which I find so unexpected and so interesting. So everyone always thinks of it as sort of completely useless and wasted time, or, a sort of bend on the road to where they were meant to be. But I'm sort of wondering about that, but we're going to have to dive into that later.
Yeah, I'd push back pretty hard on that, because it's sort of a system of thinking. And also, if you look at the history of philosophy, it's been the risk of using a philosophical term, it's been a somewhat Hegelian process, in that, it's ideas competing, and then perhaps one idea winning out, or branches splintering. And that's not a horrible idea, or not a horrible epistemological framework for investing, I think, in terms of, thinking about different ideas, and, there not being any one truth, and, having, I guess, fairly solid doubts about any ground you're standing on. It's not the worst mental framework in the world for trading.
So you start out banking with a banking job in Australia. I'm gonna condense a little bit because, and I'm not even going to mention all the places, but you really have had big jobs at some of the biggest names in investment banking. Global head of commodities and prop trading at J.P. Morgan, global head of macro prop at Barclays. I mean, a stint at Tudor Investment. So I mean, that is quite a resume. And I mention this because your first trade isn't a specific trade. It's being naively optimistic at most points in your career. And you list it as one of your best. Is that so interesting? Tell me about that.
I was sort of thinking about the sort of what small success I've had in my career. So much of that was, if you look back at it, you go like, wow, I really didn't know what I was doing. Or like I had this assumption that like it was going to be this, and if I knew what I knew now, that was just dumb. But like then it sort of ends up for the most part working out. So I sort of thought of the term naively optimistic, and I sort of look back at a lot of steps, and not everything worked out, but so many of those were like, well, I don't really know what I'm doing here, or I thought I did and I really didn't, and then it sort of worked out. So I think there's that sort of the idea of, I mean, I guess to a certain sense, giving it a go, but also giving it a go with confidence, even if the confidence is not really earned. So many of the steps I've made in my career really fit that pattern, and for the most part, it sort of worked out. And the most recent example is obviously starting a hedge fund. We spun out of a bank and started a fund in 2009, and the cliche about, often a slight tangent, the cliche about second marriages is a triumph of hope over experience. I think anyone starting a fund, I think it's got gradually harder as well, but I think anyone starting a fund, if you look at the statistics, the chance of you being in any way successful are infinitesimally low. And not only that, if you think about the opportunity cost that you incur in doing that, so you can do everything right, but if investors don't like you, you won't raise any money. You can do everything right trading, but if you don't have the infrastructure, they won't give you any money. Or it's just also super path dependent. So you can be the best guy in the world, and if you start at a time that your strategy is going to struggle, those first year or two are super important. And if you don't make any money, you won't raise any money and you won't have a business. So I think having that, and again, that's just a recent example. Those, what I just said, they're the facts. And I guess when what it was 13 years ago when I launched my fund, I didn't really know those facts, or maybe I knew them a little bit, but sort of just decided to ignore them and plowed ahead. And we were very fortunate enough that it worked out in a way that was probably pretty low probability. And I can literally go back to almost every career decision that I've made, and with the exception of a couple that I'll talk about, it was the same sort of pattern where you think, oh, I'll do this because I can, or we will, and when you actually stop and think about it, you go, well, actually, the chance of that really working is not great. But obviously, if you didn't try it, it definitely wouldn't work. So I guess that's a little bit of an entrepreneur's mindset. I don't consider myself particularly entrepreneurial, and I always remember I was at a dinner. This is probably just after I launched the fund, and it was a VC dinner, and I was sitting next to this guy who was like a serial company starter, and he's like, oh, I just love the excitement, and it's as soon as it starts working, I get bored and I want to start something new. And I'm like, that sounds horrible. Like, I've just set this thing up, and I wouldn't say, I hated it, but I didn't enjoy it. It was just stressful and scary, and at no point did it feel good. So the fact that you sit here and say, oh, I love the thrill of this, it's like, God bless, it's not for me.
Yeah. It is a special, I think, especially the entrepreneurs. I mean, building a company, the founder mentality, you've got to be, almost evangelical about it. I mean, it's an amazing skill. Back to the optimism. Do you think it was a conscious decision, or do you think it's just the way you're built?
I think it's probably just the way that I'm built. And it's interesting if I think about the specific investing, I've noticed over the years, one of the biases that I have that sometimes works and sometimes doesn't, but is at least something you want to be aware of. I'm the guy who'll say, oh, that'll be okay. Like, Russia invaded Ukraine. Oh, that'll work out. So I think it's sort of definitely inbuilt, and that, in a macro sense, that's a useful thing. And in a maybe more micro trade by trade thing, that's one of the heuristics that I definitely have that I need to be aware of and compensate a little bit the other way.
Where do you trace that feeling from, or that sort of that optimism, or that gut sense, like, oh, it's going to work out?
It's a good question. I think and again, you sort of see it in your children a little bit. There's just, some people are, confident and some people are not. And I think I've always been fortunate enough that, obviously everyone's insecure about certain things. So that's not to say complete 100% confidence in everything you do is sort of probably, akin to sociopathy. But, but having an underlying level of self-confidence that often is completely, totally unwarranted is probably a little hardwired. But, maybe parents, or I don't know, I'm not sure. I've never really thought about it too much, frankly.
It's interesting that you were able to hang on to that, because sometimes people start out like that, and then most certainly their experiences kind of break them of it, like they shake it out of them. And especially in banking, going through the great financial crisis, I saw a lot of people who were, very bold. I'm going to use, instead of optimistic, bold, but, bold and, unafraid of taking on new challenges. And the mindset changed a little bit after the great financial crisis, because so many unexpected things blew up. But you started a fund after that. I mean, you said you started in 2009, right?
It's interesting you say that about the sort of humbling of when you go through something bad. I think that, that naive optimism that the term I used, maybe you sort of want to couple that, and we touched on this with a philosophical discussion before, with naive optimism, but with humility about, bad stuff happens, in terms of any sort of certainty around, frankly, anything. You are dealing always, whether it's an individual trade or whether it's your life, with a probabilistic bet. And sometimes it'll work and sometimes it won't. Hopefully you try and structure things such that the probabilities will fall in your favor, whether that's on an individual trade basis, structuring a trade, or risk return, or stop losses, or whatever, or even on a life basis. If you think about sort of, again, back to kids, and, if my kids go to college, probabilistically that'll give them a better chance of having, quote unquote, a successful life, whatever that means. And that's a tricky term, but, so that's just putting the probabilities in your favor. It doesn't mean it'll work out. But you structure things such that you have the best chance of it working out, but with the knowledge that it might not. And you see this, it's one of those things that's sort of often another sort of slight tangent. You see this all the time with, say, sports stars who, get paid $1 gazillion, and then 3 years later after they finish, they're bankrupt. And it's like, well, how did that happen? And it's because you're making the assumption that, you're still going to get paid like a sports star, and then you're not a sports star. So I think an investment, as an investor, that's similar. You have a very volatile earning stream, and having the mindset that this paycheck might be my last one, so let's live accordingly. It's probably not the worst idea in the world.
Your second trade is one of your worst, and that's moving from the sell side to the buy side way too early without being mentally ready. So, set the scene for us. Like, what period are you talking about in your career?
That's really the one time for me that the sort of, naive optimism didn't really work out too well. And that was, I guess that was 2002, I guess. So I was in my late 20s, and I moved from Morgan Stanley to Tudor, and I moved from running a market making business and doing a fair bit of prop trading on the side to a pure portfolio management seat. And it's actually weird. I could have made that move even earlier. I could have made that. I was offered the same job sort of a couple of years earlier, and I didn't think I was ready for it. So I wasn't completely sort of naive to, oh, this will be a change, but I massively underestimated what a change it was. And again, this is something I've been asked. I've had a ton of, in my career, I've had a lot of investor meetings, and this is a question I've been asked a lot about how, why did that go so badly? And the analogy I've used is that it's sort of somewhat akin to a guy who's a bus driver saying, asking himself, what do I do for a living? Oh, I control a machine that transports people. A plane is a machine that transports people. I guess I can fly a plane. And now that's not to say a bus driver can't become a pilot, but it's a very, very, it is a job that has some similarities, but it ain't the same thing. And it's much the same.
You don't want to be in the plane with somebody who's a bus driver flying it.
Yes, or allocate money to them. Keep the analogy going. So, and obviously you can make that transition. And, there's obviously not obviously, but, a lot of people have done that very successfully. But I enormously, to quote George Bush II, underestimated the difficulty in making that transition. Moving from a very collegiate atmosphere to a very uncollegiate atmosphere, not having the power of the franchise to mentally prop you up when you're not doing well, and then having that sort of cycle into you touched on it before about sort of being hardwired to be optimistic, having that then cycle into sort of, what am I doing? I don't think I can do this anymore, and I guess I'm no good at this, and et cetera, et cetera. So had I been, again, looking back on this, had I been a little bit older, maybe a little more mature, and thought about it a little bit more about what the challenges would be and been more mentally prepared for them, I think I would have done a much better job. Because I didn't. I was a tutor for 3 years, and I pretty much sucked the entire time. And when I left, I was happy to leave, and they were not remotely unhappy to see me go. So
it's hard though when you've done well, especially when you pull yourself up and you get that job, and you're sort of checking all the boxes of really of what success looks like, to kind of get punched in the face for 3 years straight. How do you handle that mentally?
Not well, I guess is the answer for me. Not well. I mean, I get the conclusion I came to, which ended up, not being wrong, but not being as right as I thought it was like, I guess I'm just not a hedge fund guy. I guess I'm just a bank guy. So that's why I went back to a bank after that. And, thankfully I didn't go back to the sort of the buy side of a bank. The sell side of a bank. I went back to run a prop desk. So at least I didn't sort of go all the way back. But, that was the conclusion I drew.
But is it when you think about it now, with all the nuance of basically a prop desk is a hedge fund in a bank, in an investment bank when they were allowed to be, and then you ran a hedge fund and you did well in those. So were you really not a hedge fund guy, or was it something about that time and experience?
Yeah, I think it was with the benefit of hindsight, more the latter. It was just I wasn't, as I said in my bad trade outline, is just I wasn't ready for it. I wasn't ready for it. And I was too immature, and I wasn't. I wasn't mentally prepared. I massively underestimated the adjustment that it would take. And it was one of those things, and as well, it's one of those things where people tell you, "Oh, it's a big adjustment." You're like, "Oh, don't worry, I'll work it." And that's where that sort of, I'll work it out. And I didn't. So.
Is there? I don't. I have not worked at a hedge fund. Is there, in other areas, I mean, you said you were in your late 20s, right? That's still young in terms of, career and development. Is there any mentorship that happens in a hedge fund, or is it really like,
It depends on the fund itself. And I think, to Tudor's credit, they tried. It wasn't that they didn't. They wanted me to succeed as well. Trading coaches and meetings with the regular meetings with with the more senior guys there, whatever else. But ultimately, it's that's the thing about portfolio management. It is, it's sort of not a team sport at the end of the day. If you're the portfolio manager, that number next to your name is your number, and you can get as much help as you want. You can try as hard as you can, and people can try and help you as much as they want. But if you make the wrong decisions for the wrong reasons, you're gonna hurt.
Is it more of a team sport when you're on the prop side, and in other situations that you then went on to do? Can it be a team sport in that way, and does that help the process for you?
I think it does more than I thought it did, but not that much, if that makes sense. Obviously there are, and that's not to say that's the right way to do it. Different people have different approaches, and for me, I always found it just as an example. Over the years, I've hired many analysts, and I've never really found a great way to make them work for me, because either I believe them too much or don't believe them enough. So, and that's also somewhat analogous to using other people's ideas lock, stock, and barrel, because what I've found is, in terms of when if you think about an individual trade. So when you make a trade, it's very, very, very rare that ever you buy something that goes to where you think it should go, and you take it off and go, oh, that was easy. Like that almost never happens. So invariably through the life of a trade, the price action will move against you, or something will come out that'll challenge your thesis or whatever else. And if you don't really own it, so it's not, if you don't fully accept the risk and own the trade, when you have that challenge, you'll be like, what did I do this for? Stupid analyst. I should never listen to that guy. Or like, of course, if I'm trading someone else's idea, it's not going to work. And that might be true, but it might not be. And you'll invariably stop yourself out at the worst possible time. So now, obviously, there are a ton of people out there who do a very good job of using analysts, and they probably trade way wider than I will, because they got a team of people who can look at stuff, because there's obviously only a number of things that you can look at, and the number of things you can focus on in any given day. So being able to sort of use other people to do your work for you, I can imagine would be awesome, but it just doesn't really work for me personally. So, but that being said, there's also a happy medium. So that's the sort of individual trade basis, but there's also a happy medium I mentioned before about portfolio management being a somewhat lonely occupation, because it's you, in terms of ultimately the buck stops with you. So I'd make the argument that when you're structuring however you happen to be working in whatever environment you're working in, you want to structure that in a way that mitigates that loneliness, not exacerbates that loneliness. And I think my time at Tudor was it was very, at that point in time, very siloed. So you almost weren't encouraged to talk to other people about ideas, and they had a very good reason for doing that, by the way, which is not something I disagree with. So having an environment that, as it mitigates that loneliness, that's something that's important, and that changes too, by the way. So that's sort of I look at my last 15 years since I left banking. So, if you're working a prop desk at a bank, or in a trading room in a bank, you're surrounded by people. It's awesome. You wake up, you go and say hello to everyone, and sort of, so by definition, that loneliness is mitigated. Whereas if you're working as a standalone PM at a fund where you're sort of not encouraged to necessarily share ideas with people, that's a tough one.
So I think this brings us to your third trade, which is also one of your worst, and that's being a horrible delegator and manager. It sounds like that's kind of what you're talking about when it comes to working with other people.
Yeah, I think it's a little worse than that, actually. So I think it is that. Like everything you just said is true. But on the business side of things as well, I'm thinking about sort of, what I didn't do a great job of when I was running the fund. It was two things, ultimately. I don't like managing other people, in terms of in that, I don't, to a certain extent, I'm very happy to, I don't want to say be left alone, but, have interaction on my terms as opposed to other people's terms, which by definition is not great management. And there's also an element of very much liking to be treated, trying to treat other people like I'd like to be treated, which for the most part just leave me alone, set me rules and leave me alone. And again, that works pretty well for a portfolio manager, but it works pretty horrendously for virtually every other task you might have. So I think if I think about sort of my time running the fund, I just didn't really do a very good job of that. I think I'm not a good hirer, and I always think about the sort of the substitution heuristic when it comes to hiring, and that's the idea that if you have a complicated question, you are programmed to substitute a question in the vicinity, so a similar question that's much easier to answer. So if I think about sort of hiring for me, should I hire this person? Are they going to be any good at what they do, and how do they fit, and yada, yada, yada? That's a very complicated question to answer. But I would generally substitute, do I like this person, for that, which is a very easy question to answer. Do I or do I not? It's a binary thing, and you can know that within about 30 seconds of meeting someone. And that doesn't necessarily lead to the best hiring decisions, which I've found through my career. So I don't really know how to fix that, frankly.
It's so interesting. It's called affinity bias, right? We hire the people that are most like us, but most people think it's because we want to be surrounded by people who are most like us. But you're sort of suggesting it's because we're avoiding a much more complicated question, which is a really nuanced way to think about it. And you're probably right, because that's the unknowable. That's hard to answer, that one.
I guess in a way I'm somewhat fortunate in that, what I do for a living, unless I want to be running a fund again, doesn't really require me to be a particularly good manager. So I do have a couple of people working for me now, but they're more on the tech side of things, and I think at least as antisocial as I am. So they're perfectly happy to be left alone for the most part, and I'm perfectly happy to leave them alone.
Are you antisocial though? Is that why you think you really? Is that?
I don't know. It gets back to the thing we talked about before with respect to my daughter. I am not antisocial with people I know and like, but I am antisocial with people I either do not know or don't necessarily like. A joke I've made about myself before that if there was a hell and I go there, it would be like some big gala where I have to mingle and talk to people I don't know. I would absolutely hate that. And I do absolutely hate that.
By the way, most of us do. I think very few people totally thrive. They are out there. I've seen them and I marvel at them. But I think a lot of us suffer with that. Although when you're running your own fund, you get the opportunity, as we just said, because you're trading down to the simple question to say, do I like you? So you're presumably hiring people you like. So the antisocial part doesn't really fit that description. Let me ask you a question. When you were working, when you were younger, did you need people to tell you that you were doing a good job? Did you like feedback? Or did you really not feel the need for it?
That's a good question. No, I don't think I really needed it. And I guess, again, that's a portfolio manager's lot. Your feedback's your P&L. In terms of I'm doing a good job, it's positive. I'm doing a bad job, regardless of, obviously there's some performance variance in there and you can crunch those numbers. And I guess that's part of what draws myself and probably a lot of other people to this job, which is that, the feedback is very objective. It doesn't have to be human.
So that's the thing. But managing that is a big part is communicating constantly that feedback. And that seems to be the thing that because if you don't need it yourself, you don't understand that other people do, right?
Well, you can understand it intellectually, which clearly I do, but it's just something I'd rather not do. I find that a painful, that's just stuff that I don't want to do. And that's not good management at all. I mean, I realize that, but I still don't want to do it. Could
you have chosen to sort of double down and say, this is where my weakness is, I'm going to be a better manager?
Yeah, 100%. I think, I bought a bunch of books and I read some of them and I found them really boring. And I think it's just, that's that's what an MBA is in terms of in that, I have a good friend of mine from Australia who went to the INSEAD course. He loved it. Actually, my dad did it too, funnily enough. And my dad also loved it. My dad is a very good manager. They loved it. But I was like, that would be, again, if my hell is maybe going from a room, people that I have to talk to that I don't know, and then to an INSEAD course about management, that would probably be a couple of different circles, the same hell, I think. But I had to keep that metaphor, to really stretch that metaphor. But so yeah, I think you can absolutely do it. I mean, there's a massive industry of management training that teaches you that stuff. So I think you can do it. And but that's not my thing.
So your fourth trait is one of your best, and that's really, really liking to read. Why is that one of your best traits?
Well, it's sort of touched on a lot of the things we've already talked about, which is there's a level of, I guess, intellectual. There's always a paradox in saying intellectual humility, because it's actually quite an arrogant thing to say. But there is an element of intellectual humility in that there is an enormous amount of stuff that I don't know and I want to know. So how am I going to find that out? It's by reading. That's it. I mean, I can, that's the only way to do it. And then in terms of, and this is sort of a more recent buzzword that I'm sure you've heard, the idea of being a lifelong learner, how that keeps brain plasticity and all that sort of wonderful stuff. I think that's sort of true. I think that's sort of, the idea of, wanting to keep knowing stuff and learning new things till the day you die. I think that's an incredibly powerful, interesting thing. And again, how are you going to do that? It's not, you have so many conversations in a day, and getting back to all the things we've said, chances are you're talking to people who are somewhat similar to you. So there might not be as much, variety of thought there that you get by just picking up a book. And then sort of thirdly, and the most obvious one, is that, a big part of investing, especially in a macro sense, is just knowing what's going on. And again, how do you do that? You do that by reading a lot. So it's funny, my youngest son is actually the only one of my children who's interested in what I do. And he's, always asking about the stock market, blah, blah, blah. But unfortunately, my youngest son is also dyslexic, so he finds reading very challenging. And he's like, I want to do your job, Dad, but the reading. I'm like, don't worry, Matthias, you'll get it. It's cool. You can do it in different ways, and audiobooks and blah, blah, don't worry, we'll work that out for you if you're interested. So having, that's a good example of, having that be a challenge for you. And, I've always been the opposite. I've always loved to read. So, having a big pile of crap that I've got to read that's exciting. I mean, there's going to be something in there that might be interesting, it might make me smarter. And that's, that gets me, gets me out of bed every morning.
So do you read, is it all economic reports and finance related, or is it varied?
I read mostly, a ton of fiction. So, but I'll read, pretty much literally anything in terms of, I read, I'm thankfully a pretty quick reader. So I read a lot of books every month, and they are very varied. And there's obviously all the periodicals and general economic stuff that anyone sitting in my chair will plow their way through on any given day. So there's that too. And so, enjoying that, because that you sort of got to do it. And if you don't enjoy it, that would make for a fairly short career, I suspect.
Yeah, I totally agree with that. That's it's just like opening up a sort of new line of sight, which is kind of extraordinary, And with this day, with everybody with their phones attached to them constantly, I'm always screaming. Before we came on, we established we both have teenagers, some of them the same age, or kids in the same sort of vicinity. And I'm constantly freaking out on them about just being on their phone all the time. We all do it, but I feel like it's robbing everyone of so much time that could be spent elsewhere. It slightly concerns me.
Yep, I couldn't agree more. And even more so, there's that. And there's also just the attention span thing. Having a decent attention span is another cliche, but a superpower. And I catch myself. I do it too, in terms of to the point where if I want to sit and read and concentrate on something, I leave my phone on my desk and go to a different room and do it there, because it's stupid. And by design too, it's stupidly addictive. That is what it's designed to do.
How do you curate what you want to read? Do you get recommendations? Do you go seek it out? Does it just somehow accidentally land on your lap?
I read a lot of book reviews, in all seriousness. So a ton of book reviews. I subscribe to book review magazines, and so I try to stay on top of it, things that way. And then when it comes to the more work-focused stuff, there's a habit of years to a certain extent. You find stuff that resonates with you? And then I've been asked this question a lot, and then I've sort of thought about it a bit. And I think ultimately I'm also just a bit of a sucker for good writing. So if I like to read it, I'm going to read it. And it could be, and again, there's a heuristic there that you want to be a little bit careful of. Just because someone writes well doesn't mean their ideas are actionable, and vice versa. If the guy writes horribly and his ideas are awesome, you don't want to dismiss that. But yeah, so it's not particularly scientific for me. It's if I like to read it, I'll read it. If I don't like to read it, I won't. And again, ultimately, what's the point of any of it? Like in terms of why you're doing any of this stuff, it's to develop a worldview. And generally, getting back to the comment I made before about if I do a trade where the guy says buy dollar yen, you go buy dollar yen and you don't own it, you'll probably mess it up. Whereas if you have a worldview that then leads you in that direction, you'll probably do a better job of risk managing it. So the reading is really just to develop that worldview. And the analogy, again, I used to always use with investors was the sort of the idea of the rubber band ball. So the ball of all the rubber bands. I mean, all you're doing to read is you're adding a rubber band or subtracting a rubber band, and then that rubber band ball that you have is the basis for your views, and that's it.
Do you consider yourself a creative person?
Probably a little, but not very good at it. So, so I think there is a large element of imagination that's required to do this job well. So you want to be thinking about, and if I sort of, I tend to be pretty quick to beat myself up about things. If one of the regular things I beat myself up about is the lack of imagination. I'm just, why don't I think of that? So I think there's an enormous creative element to investing, which is thinking about things in a different way. And I'm not awful at it, but I wouldn't necessarily think I'm particularly great at it. And I guess when it comes to writing, I think I'm an okay writer. I write a monthly note still because I like the discipline of it. And, there's a lot of people who do a much better job than me, but there's a lot of people who do a probably worse job than me. So I put myself sort of firmly in the middle of the pack in terms of writing ability. But though I do try and sort of make it personal and have my personality shine through it. So I think I do an okay job of doing that. And then, when it comes to other stuff, I've been hacking away at the guitar for the last 7 years, and I would love to be better at that, but I never will be.
James Altucher did this podcast with us, and he said something that really stayed with me, and it seems to me to connect to your your love of reading, or the fact that reading is essential. And he was coming off a really bad period, just a disastrous period where he lost tons of money, and he's just in a really dark place. And he took out a paper and said, "I'm going to write down 10 ideas. Every day I'm going to write down 10 ideas." And it was a slog, it wasn't something that was coming easily to him. And he felt like that sort of forced discipline of creativity and content and just thinking, really was what dragged him out of his spiral and put him on the right foot. And I just thought that was such incredibly sage advice for everyone, and seems to me to be very connected to your reading. For him, it was 10 ideas. For you, it seems to be reading. But that idea of challenging yourself to learn and think, outside of, the sort of moment that you're in seems incredibly powerful. That's
a massive part of why. So as I mentioned, I still write a monthly note, which when I was running external money, I had to do, and I tried to have other people do it for me, and it never really worked very well. So I always did it myself. And when I did it for my external investors, I found it was like a homework assignment. I used to absolutely hate doing it, and it was more of a marketing document as well. So it was like, things are doing well, you sort of want to spin it. And if things are doing badly, you sort of want to spin that too. And it wasn't an honest document. Whereas now that I'm doing it just for myself, and I still send it to literally thousands of people. So if anyone wants to be on the list, send me an email. The big part of why I do it is exactly that, because it forces me every month to sit down and write a long form piece about what I'm thinking. And, like right now, I'm not really thinking, haven't had a particularly good quarter. So I'm like, I don't really know what I'm thinking, but in the next 15 days, I'm going to have to come up with something. And, writing that down as well, you don't want it to suck. So it's got to be something at least somewhat well thought out, because you can have ideas in your head. And I think the sort of, degrees of testing those ideas to a certain extent. So I can have an idea in my head, and if I don't mention it to anyone, it's just an idea in my head, and I can think that I've examined every angle of it, but I probably haven't. If I have a conversation with someone about it, that takes it to the next level where I have to defend it to a certain extent. And I think the level after that is actually writing about it, because then you really have to, you see very quickly where it's thin, and then that forces you to either thicken it or abandon it, and that's a good process.
So you see, you're incredibly introspective for someone who's had this very successful career by anyone else's estimation, and you seem sort of very willing to be critical of yourself. I don't know if overly critical, maybe even, but that's probably for the purposes of this. But that's the vibe I'm picking up. Why is that?
I definitely lean that way. And I don't. It's funny. I don't feel I've been. Obviously at some level, I know I've been very fortunate. On the other level, I'm like, I really effed that up. Like, I really should have done a lot better, and I really do feel that way. Like, and I guess in a way, that's not great, because it's sort of, maybe lessens overall happiness, perhaps. I always think about David Schwimmer, the guy from Friends, and like, what does he do every morning? Like, so does he wake up? Does he wake up and go, today's the day I get another role? And then he goes to bed, not today. And then he wakes up the next day and goes, today's the day I get another role. And this is, you think about Hollywood actors who have been very successful and then just disappear. What do those guys do? I mean, like, literally, what do you wake up in the morning and do? And you have all the money in the world, but what a horrible life. That just sounds, and maybe I'm randomly thinking.
Sorry, David.
No, but like, what do I do? I mean, this
is the huge challenge of talk about having a growth mindset of shifting your identity, right? I mean, there's probably anything harder than reinventing yourself. Reinvention takes an enormous amount of, like a mix, I think, of like creativity, energy, humility, self-confidence, to sort of become something else after you succeeded.
Yeah, especially the closing the fund and moving to a family office thing, in terms of that was really hard, because, you put your sort of heart and soul into it for me, in my case, a decade, and it's sort of the accumulation of everything you'd worked towards. As I said, I don't feel that we did as good a job as we should have, in terms of, I think we had an opportunity to do something incredible and we fell well short of that. So I will regret that forever, basically. Like, so there's no going back; it's done. Like, so there'll always be that regret. But at the end of it, I always sort of, well, not always, but again, this is a topic that I've thought about a lot and I've been asked about a lot. I have two sort of little throwaway lines about the sort of, the move from a external managing literally billions of dollars of external money to just managing my own little family office. The hedge fund side of things, I sort of say I get most of the time. I'm glad I did it, but I'm glad I'm not doing it anymore. And the other thing is that, it's worse, way worse for my ego, but probably better for my soul.
I think that this is where being the lifelong learner comes in, because there's a point where the transition, the introspection and the hard work you're doing now and maybe still doing gives you those lessons and insight about yourself. And then at some point it does free you up with just more knowledge to be ready. As Sergio Silva said to me, there's always luck involved, but when you're ready when the opportunity comes, right? Like, there's a sort of lucky intersection of something that will, define your next chapter. And you're kind of meant, by doing all that hard work and introspection, you're mentally ready and sort of free to do whatever that is.
Also, I think you have to realize it's not static either. So, and you have to sort of fit what you're doing to how you feel at that given point in time. And it's funny, I was literally having this conversation yesterday with a friend of mine. We were talking about our fathers, and he's my age as well. And, he's doing well, but still working very hard. And as am I. And he was talking about his dad, who retired, and he was a CEO, CEO of a division of a big public company in Australia. So successful guy. And he retired when he was, roughly our age. And my friend's a little older than me, but he retired when he was 52, and then spent the next 17 years as a very active board member on a golf course. And my friend was saying, I don't know how he did that. And I sort of would agree. But there may be, and we both also agree, though, there may be a time, though, when you wake up one morning and maybe the fire's not burning quite as strong as what it was for whatever you're doing, today as was the day before. And then each day it gets a little less sort of intense, and then you go do something else. So I think it's sort of again, introspection and somewhat self-knowledge around this stuff, where you sort of think, okay, well, I'm pumped to get out of bed to do what I do today. And if tomorrow I'm not pumped to get out of bed to do what I do today, I probably should do something else. And I guess that's where having, been fortunate in your career and having the wherewithal to actually make, because most people are not given, that's not a choice. For the vast majority of humanity, that is not even close to being a choice. So you have to be cognizant of the fact that you are ridiculously blessed to even be able to think that way. And then don't fuck up the blessing, frankly.
That's exactly what I was going to say. Yeah.
Know that, and then, use it.
Yeah. It's kind of, but even for those who don't have the ability to think of it on such a grand scale, being able to, pivot your perspective and embrace change and know that something else may be there, and, just be ready for it, I think is fantastic advice. And do what you can. Read those books to prepare yourself.
Yeah. Yep.
Todd, this was such a fabulous conversation. Thank you so much. I can't wait till we see each other at a big gala and go hide outside somewhere away from everyone.
I'll be the bar.
Come find me.
I'll be the bar.
I'll be with you, and then run out on the patio where no one can see me. It's so fun. Thank you so much.
Thanks, Maggie. Much appreciated.
All right, that's a wrap on this week's edition of My Life in 4 Trades. For more on the series, visit realvision.com/My Life in 4 Trades. Make sure to use the numeral 4.
Hey everyone, thanks for watching. If you like this show, you're going to love Real Vision Essential. At Real Vision, we talk to the most successful investors in the world and deliver videos that make finance interesting. It's all about helping you become a better, more confident investor. Now, we could dress that up in fancy marketing buzzwords, but it's really that simple. Oh, and right now, you can join Essential for $99 for a full year instead of the usual $239. Visit realvision.com/essential99 to join the Real Vision community. That's realvision.com/essential99.